Hi everyone, welcome back to Upside Down Data. Today I want to talk about some of the unfortunate events that have transpired in the Elrond ecosystem in the last couple of days, and then whether or not that might matter for its longer term price action, and also consult some of our models, see what they think about Elrond's recent price action. If you like the content and remember to subscribe to the channel, give the video a like and follow us on Twitter, where we put out regular updates about our risk indicators and more. So if you are involved in the Elrond ecosystem or if you follow it closely, you probably saw what happened over the last couple of days with the Maiar Exchange. This is the dominant or the main decentralized exchange on the Elrond network. And essentially there was a bug exploit. There was an attack that happened where attackers were able to withdraw massive quantities of EGLD, and also they dumped a bunch of that EGLD onto the Maiar DEX, which caused the price to collapsed down to about $5 on the Maiar Exchange when they did that. Now, the devs did intervene. They shut down the exchange. They say that they were able to recover the funds, or the funds that weren't able to be recovered, they're going to be covering from their end, from the Elrond Foundation. So people will be made whole. You know, people aren't going to be losing funds from this, is what they have promised. But certainly this isn't a great thing to have happen, right? You know, have the dominant DEX get attacked, get exploited. It's never a good thing for a network. Now, the one thing I will say is that, you know, even though this is certainly not a great thing for Elrond, and the price of EGLD did, you know, suffer as a result, you'll see this big capitulation kind of wick, this big seesaw action that happened on June 6th when this was all transpiring. See this massive volume that was traded. You know, a lot of people kind of panicked out of the space. Other people stepped in to buy. In some ways, it's remarkable that EGLD was able to hold this kind of low range of price where it had been recently, despite all this kind of potential panic that was happening. Now, one of the reasons why, you know, EGLD might not have been affected more based on what happened here is that really, you know, an exploit on a DApp within a chain is not going to be, shouldn't be as problematic as something like, you know, it's not a Luna situation, right? It's not like the entire blockchain exploded. And it's not even something like Solana, where Solana, you know, will more often than it really should, well, arguably should never go down, but, you know, it goes down, it's been going down, you know, in a not so infrequent pace. You know, the Elrond blockchain was fine throughout this. It wasn't having any issues. It was just a specific problem with a specific decentralized app on its network. And so from that perspective, you know, the collateral damage is likely limited. And that's probably partly why we didn't see the price capitulate more. Because really, think about this from a fundamental perspective of the Elrond network, the Elrond blockchain. The blockchain's fine. There's no problems there. It's just this DApp. So whether or not this will impact Elrond in the future, I think some people are asking. I personally, again, my own opinion, don't see this as being a particularly big problem in a long-term perspective. Just because, again, it's one decentralized app on the network. Granted, it is an important DApp, but the fact that they were able to catch it and they're going to be making people whole, most likely this will be a thing that wouldn't be especially problematic in the long term. You know, I don't think that this would be the downfall of the Elrond network, for example. I just don't see it as being such a big problem. But in the short term, it's certainly not great, right? And I think that price action is going to remain is likely to remain depressed in the short term, just based on this, where people might be spooked by this happening. They might be concerned, they might be worried, people might not be as willing to step right in. Demand might be limited for the kind of the near term. But again, long term, I personally don't see this as being a huge problem. But you should make your own opinion of what you think is most likely. Now, if we zoom out and just think more about where Elrond is, just in a more macro perspective, or just kind of looking at its broader price action, kind of ignoring this more short-term blip that we saw with this issue with the Maiar DEX, what we can see is that, you know, Elrond has been in a pretty nasty downtrend this whole time, but notably, it has actually managed to stay above its all-time, above the low that it put back in the summer of 21, which in some ways is notable because a lot of other assets, crypto assets, you'll see have actually broken below their summer lows. You know, Bitcoin, for example, being the biggest, you know, crypto asset, it broke below its summer low. You'll notice that Elrond is still actually trading above that. So that is notable, that not all crypto assets have been able to maintain this level. Elrond right now is really kind of testing this penultimate low from the summer. It's not even back down at this lower level at around 53 dollars here. So that is one thing that is notable. That is maybe hopeful from a more macro perspective, that even with all this bloodbath, it still has actually been able to maintain a higher high relative to the summer, whereas other crypto assets have not necessarily been able to do that. Might suggest a little bit of relative outperformance from that perspective by EGLD relative to some other assets. That's something that just I thought was interesting to note. Now, another thing that we can look at as well with EGLD is just comparing the drawdown we've been seeing more recently, which is about an 88% drawdown from the all-time high up here, to previous drawdowns that EGLD has experienced in its history. So the very first drawdown was actually the worst that EGLD experienced. It was about a 92%, actually rounded up to 93%, let's call it, drawdown back here going into the March 2020 crash, somewhere in that ballpark. Then the second one it had was around an 80%, 81% drawdown. And then the third drawdown it had was around 80%, 79, 80% drawdown in that ballpark here. So this drawdown that we've been experiencing so far is the second worst that EGLD has ever experienced, right? The only time it's ever been worse in terms of a drawdown has been really from the beginning of EGLD, more or less, where it had a steeper correction before being able to move back to the upside convincingly. And we're doing that again. And one of the ways that we can kind of think about this, or the way that I kind of look at this, is that I kind of view this as being the first real bear market that EGLD has experienced. Some might call this a bear market back here in, 2019 going into 2020. Possible, although I would argue that the crypto market as a whole was already in a bull market at that point, and then obviously with the March 2020 crash being a bit of a black swan event in the middle. But really, the bottom of the crypto market, and certainly Bitcoin, had happened in 2018. And things were more or less starting to move into a more bullish footing by that point. So I would really see what we're in right now as the first real bear market that Elrond has experienced, from the perspective of this being kind of a bear market across the crypto space, and the first time that Elrond is really kind of experiencing that type of environment. So whether or not Elrond has further to fall, I think, is an open question. Now, to get down to around 93% correction or drawdown in this particular drawdown that we're experiencing right now, Elrond would have to fall to around $40, maybe a little bit below $40. We can see, if we were down at around $39, that would be around a 93% drawdown from the all-time high here, which would put it in line with this drawdown that we saw back at the beginning of its history. And so that's something to keep in mind. Now, again, being the first kind of real bear market, at least in my opinion, potentially, that Elrond has experienced, there's nothing to say that 93% has to be the biggest drawdown that it would ever experience. It certainly could fall further, especially if the rest of the crypto space were to get really bearish. If Bitcoin were to collapse further, etc., then it's not impossible for it to fall lower. But should that not happen, if the bottom is more or less in the crypto space, it would be plausible to see this as being a bottoming point for Elrond as well in that type of eventuality. And again, I think the way you have to look at this, as with any kind of altcoin, is conditional on what the broader market is doing. I don't personally see Elrond growing and ripping to the upside while the rest of the crypto market is just continuing in a downtrend in a bear market. But if the worst of the bear market has already transpired in the crypto space, then Elrond is already, drawn down well beyond what, or to the point that we might expect in a really bearish position. And so I think anyone who's saying that Elrond is guaranteed to keep falling from here, I think that's a silly thing to say. It could happen, but there's absolutely no guarantee that it has to keep falling. I think from here, moves back to the upside are very plausible. Now let's look at some other data that can give us another idea about what's going on. So we're going to pivot over to some of our models that we have here at Upside Down Data. So the first model I want to show is our Upside Downside Potential Indicator, or UDPI, which is our risk indicator that we have here at the channel. If you're not familiar, this is a machine learning based model that tries to quantify the amount of risk in an asset at a given point of time. So I'm showing you here the price history of EGLD color coded to the UDPI output. 5 is high risk, -5 low risk. And you see that the UDPI does a really good job of identifying these high and low risk points in EGLD's history, where generally speaking, when you get to these high risk points, correction to the downside often follow. And then when you're down to these green zones, some upside, and oftentimes a good amount of upside, will follow as well. And you'll notice that in this more recent move to the downside, we've actually revisited this really kind of deep green level. And we can actually see this a bit more clearly if I just show the raw output of the model. So the white line here is the raw UDPI level across time. And then the yellow is the price, the EGLD price overlaid on top, just to give some perspective. And what you can see is that where we are right now, so this is the long-term version of the UDPI I'm showing you here. So this cares about moves that play out over months to years. So it's a much more long-term macro-focused version of the UDPI. We do have some more short-term ones, but I just want to focus on the more macro perspective here. What you can see is that where we are right now is very close to the lowest risk level that Elrond has ever recorded. So the lowest risk level was down in the depths of this correction coming off of the March 2020 crash back over here. And we're revisiting basically the same level. We're dipping down below -4, almost touching -5 right now. And so what this can say is that, you know, relative to EGLD's entire price history and all the behavior that it's shown, you know, the UDPI estimates, just based on everything it's seen from EGLD, that this is you know, a relative value zone similar to following from the March 2020 crash. It's, you know, considerably more upside potential than downside potential that exists right now. So does that mean we should crack out the champagne, you know, go all in on EGLD and just, you know, ride it to the moon? Well, not so fast, right? Because again, as I said before, really what happens with EGLD, in my opinion, is very much tethered to what happens with the crypto market generally. And one of the things that's important to remember with any model like this that's, for example, looking at the history of EGLD, is that it's only able to learn based on the data that it has, right? It's only able to learn based on EGLD's price action that has happened in the past. And one of the issues there is that EGLD, as I mentioned before, has never really seen a full-on bear market. You know, again, some would argue that the move from 2019 into 2020 was a bear market, possibly, but again, in my opinion, it hasn't experienced a full bear market because it has not experienced a time when the crypto market generally was in a pretty steep bear market. And so from that perspective, the UDPI doesn't really know exactly what to expect from EGLD in that type of environment. And so its estimates are all based on what it's seen in the past. And so most likely it's using this move in the past back here as being a way of kind of calibrating itself of what maybe to expect in this more recent drawdown here. But again, there's no way of knowing if this drawdown is going to be similar to this drawdown, or if this bear market is really going to be that diagnostic of what's going to come from here. And so I would not take this as a guarantee that price can't fall further from here. I just want to be crystal clear about that. Don't take a level of almost -5 as being a guarantee that we can't see more negative price action, because we absolutely could. Again, the model is having to learn how EGLD will behave in a bear market. But that being said, should historical price be diagnostic of the future, and should this be kind of the maximum pain of the bear market, you know, if the bear market is close to its end, then it very well could be that this is a relative value zone, and that there is quite a bit more upside potential than downside potential that's realistic here. And a bottom here is very plausible, but it's by no means guaranteed. And I just want to be crystal clear about that in terms of how we interpret these data. But certainly, I think it very well could be the case that in a year or two, we're going to look back at this and say, oh yeah, obviously that was the bottom. You know, look at where the UDPI level was at the time. But again, just want to be clear, this does not preclude or make impossible the possibility of more downside. But what it does say is that certainly there's more realistic upside potential right now than downside potential compared to something like when we're at the all-time high. That is very crystal clear. Or even just back here, considerably more upside versus downside potential than even existed back right here when you see the UDPI being up almost at 0, really kind of pricing in or building in the possibility of a capitulation, which is what we saw. So we'll have to wait and see, but certainly at least some short-term upside from here is very plausible in my opinion. Now, another indicator that we can look to see whether or not the trend is likely to be reversing in the near future is the Trend Confidence Indicator, or TCI. So if you're not familiar, this is another machine learning based model we have here at the channel. And the way you can read this is that 0 is kind of this cutoff between bearishness and bullishness. Being above 0, generally bullish, below 0, generally bearish. And essentially, if you're in an uptrend and the TCI is green, that's bullish. That means you can believe that this uptrend is likely to continue. But if you're in an uptrend and then the TCI flips red, that's bearish. That means that the uptrend is likely over, downside is likely to follow. And you can see that happening very clearly here. Flips red, downside follows. Actually flips green well in advance, early warning of this upside to follow, and indeed it followed. One of the benefits of this model, one of the really things I really like about it, is it's a leading indicator often. It will give you an advanced warning of a trend reversal, which very few trend reversal indicators are able to do. That's one of the things I really like about this indicator. And then again, you know, shot off to the upside, and then, you know, if we ignore this little blip here, which, you know, sometimes this will happen, you have a single close, then you move back up, more or less continue to be green all the way throughout this move. But then again, shot back down into the red, warning us that downside was likely to follow. Indeed, that's what happened in the summer. Green again, moving up through, down red as we kind of range sideways, coming down from this local high here. Green for the all-time high, red down here. Green for this limited upside we saw, and then turning green before this capitulation, giving an advanced warning that that was likely to come. And now what we can see is that we're still in the red, right? We're not at a point yet where the TCI thinks that we're likely to be reversing to the upside. But we are slowly but surely charting a course back to the upside. And so if and when, I shouldn't say if. I'm pretty confident that the TCI is going to flip green at some point. But when it flips green, that's where I will personally become more confident in some upside following from EGLD. Not quite there yet. But really, kind of the way that I see this, and if we take kind of a more holistic view, if we consider the recent kind of news events that have happened with the Maiar DEX, we take the low level that we are at with the UPI level and where we are at the TCI. My personal outlook is I think that the most likely place for EGLD price action to go from here is more or less consolidating where it is, kind of ranging sideways. Maybe setting in slightly lower lows, maybe start bouncing back to the upside a little bit, but more or less chopping in this general range that we've been in, you know, in the last couple of weeks. I don't see it as being especially likely just across these data that rip to the upside is guaranteed. You know, I'd like to see the TCI flip green before I get more confident of that. But I also don't necessarily see a reason why we have to dump further from here. I think we would dump further from here if the rest of the market pukes itself, if Bitcoin capitulates for some reason. But if everything else kind of stays the same, all else being equal, I kind of see a more kind of short-term consolidation being likely, and then potentially leading into a point where enough support has been built up, you know, weak hands have been shaken out, strong hands have bought in, where then a course back to the upside would be more plausible. That's what I'm currently seeing. I think that in the long term, the fundamental value of EGLD hasn't really been affected by this recent issue with the Maiar DEX. I don't see that as being all that important. And I think just kind of from a longer term perspective, that if we are able to avoid another massive capitulation in the crypto space, kind of outside of EGLD, then I think that this is likely to be a point where we look back and seeing it as being an extreme value zone for EGLD. But again, that's assuming we don't get a massive capitulation, which could expose the downside. So it would not surprise me kind of overall if we look back at this in a year or two and say, oh yeah, obviously that was the deep value zone looking at an indicator like PI. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. But a lot of updates about indicators and more over there.